All right, ladies and gentlemen, I hope you had a wonderful weekend. We got another exciting week ahead in the stock market, but this may be the last chance that the market can come down ahead of the quarter. So pretty much we have a big event on Tuesday with Powell, and that's what I want to go over here with you. But let's talk about what happened on Friday. If you did not see it, it was a crazy non-farms payroll. I'm talking a statistical outlier, 9 standard deviations. It came in really, really strong, and you actually went down. If you've been watching, we've been talking about how surprises can move things, and definitely Friday was a surprise, but right when the bell opened up, the market got bid up only for it to come back and end right here. So this is going to be something we have to deal with tomorrow and the rest of the week. There's probably going to be a hangover from it, but now let's talk about this event. This is what I want to start with. We have a lot to go over, but I want to talk about what is happening on Tuesday. You are going to hear from Jerome Powell. It is the Washington Economic Club, and Powell is going to be speaking. So if you've ever watched these before, just simple after the Fed meetings or before the Fed meetings, it's not uncommon to hear from Jerome Powell. He'll come up and do these speeches. He answers questions. It's usually at a dinner, and depending on what he says, the market moves very, very big. But why I want to highlight this and why I'm saying this is that last chance for a crash, if not, because this is how Jackson Hole and August played out. So what I'm calling this sounds kind of weird, but it's a reverse Jackson Hole. So right here, this little big block that you had, this was Powell speaking before one of these economic conferences. He really assured the market that, nah, I do not like this rally. Things started to come down, and then a week later, maybe like a week and a half later, this right here was the Fed meeting, and then we started to go lower. So this is why I'm calling it reverse Jackson Hole, because take a look right here. This was the Fed meeting, and now 1 week later, there's definitely not as much time you hear from Powell. So instead of hearing from Powell first, dropping, then having a Fed meeting, you're having a Fed meeting that brought the market up. Everybody loved it. That's what unleashed this bullish sentiment. And then now Powell is going to come up and talk again. So why this is so important, because if Powell says anything hawkish and kind of like changes the script, that could calm the market down. However, if Powell comes in and does not say anything and pretty much says what he said last time, does not fight back against anything, well, that's another green light for the bulls, and the bulls are going to run with it. And now on top of it this week, you really don't have that much data, and now we are going to start moving into the rest of the companies for earnings, and at the very least, you have gotten beyond all of the big tech earnings. So, Chad, it's going to be a wild one. I think this will be very key. There's a couple of events, too. A couple of things happen overnight and over the weekend, from the balloon all the way down to even Italy's internet getting cut off, and then even a new Bank of Japan head, or who they are talking about replacing Karuta. So it's going to be pretty wild. We are going to have a lot. It's going to be exciting. And I'm telling you, man, the market is truly insane. And we are setting up this first quarter, and where we end by the end of it, man, you know, just keep your head in the game, because anything can happen. So I got the plays, I got the keys, all of that. But before we do that, I need your help, okay? This is the random account generator. What we ask on this watch list, you post a strike price expiration date, post a random play, keep it below $100. We are going to pick a random one in the morning, and we're going to see the performance. So we did good around August, September. It's kind of been chilling out. The GMEs and the Lucid, they didn't really hit as well, even though a lot of meme stocks and short squeeze stocks rallied. So let's go, Chad. Post the play. We're open to anything, though. Come on, post that below, and thank you for your participation, but run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, let's get right into it. Like I said, there is not much data this week. So if you go look at the economic calendar, there's not too many things. You're going to be getting consumer sentiment on Friday, and that'll be a big one, and I think even trade balance. But for the most part, this is a pretty dry week economically speaking. And just don't forget, we're coming off of that giant non-farm. So you're going to get that. You're going to get the rest of earnings companies like Walt Disney, Uber. There's even going to be more next week, but like I was saying earlier, it is just no longer the big tech companies. So we'll see how that plays out. But when it's all said and done, I think the main event this week is going to be Powell on Tuesday, and then following Powell, you're going to get John Williams, Waller, and Harker. These are all other Fed speakers. I think Waller and Harker on Friday, and then John Williams might be tomorrow, or he might be after Powell. We're going to see, but all of these Fed speakers, they will be the ones who could kind of dictate things. They have the ability to move the dollar in bonds, and really, that's what we've seen things be sensitive to, but also the market's kind of been in its own little world here, reacting to all of the positive sentiment and leading into the future. So keep that in mind. That is key number one. But now key number two, that jobs report was big, and that China balloon, we shot it down. If you didn't know about it, it's kind of creating some China tensions. But what I'm trying to tell you here, there's going to be a hangover effect coming into tomorrow. So we'll see by the morning, and we'll see what happens. But right now with like Asia and everything else, they're kind of responding to our jobs report and everything that happened. And then on top of it now, this is what's going to feed into the dollar. And like I'm saying, dollar and bonds, there was rumors of a new Bank of Japan chair. It is Amamaya. I think I'm saying it right. I don't want to butcher it, but the thing is, this guy is one of the OGs that helped architect the loose monetary policy. So on news of this already, the yen is starting to weaken because people are saying, well, if Karuta leaves and then this guy who was part of creating, the yield curve control and loose monetary policy and keeping the rates low, if this guy's going to replace him, then maybe these projections that Japan is going to start getting more tight, maybe that's not going to happen. So this could affect a lot of things because if the yen weakens, dollar could strengthen, and then everything else with the China and all of that. So I'm sure this is going to take effect here this week, or it will be something until we find something else to react to, but definitely in a midterm scale, this is something we're going to bring up. So keep that in mind. That is key number two. And then finally, like I'm saying, this whole reverse Jackson Hole thing, it is going to be key. But one thing to keep in mind right now, the market sentiment is still bullish. And what I've been saying on Friday, it really seems like the market needs to run its course. Now, this is from Bank of America, and I do agree with it. But what they are saying is watch for mid-February for things to slow down, or we'll find out really if things slow down if Powell says something this week. But what they are expecting now, and I think you guys might appreciate this one, is that the market will top out and stop squeezing like this once we get good data. Essentially, go back to like October 13th. If you guys remember, we had really, really bad CPI data, all-time high, and then you rallied up from there. That's actually where all of this rally started, if you wanted to think about it. And what they're saying is if bad data made you rally, once the data comes through and we get what markets want to see, that soft landing data, that'll probably be when it slows down. So it's going to be interesting, but now this is why I'm saying for the rest of this quarter, the next Fed meeting is going to be in March. You're going to have all of the earnings. You're going to have 3 months knocked out of the year. That's the next time we're going to hear from Powell. We're going to get 2 more data sets. You got CPI in a couple of weeks, and depending on what that highlights, maybe it'll play out in this way where once we get the data the market wants to see, then you stop getting so squeezy, and then the narrative kind of changed to, okay, well, what's next? We got 9 more months of this, so let's see what happens. But hopefully this helps you out. I hope you're ready for it. Again, this week should be pretty straightforward, and Powell, he's going to be the X factor with the gasoline, so let's see what happens. But let us get into the plays. So right off the bat, I got a couple of plays that I made on Friday, and these are going to be the first 3 plays. I'm holding a bunch still. We're going to go over that. But Meta, I made a play on this one. I went long on Meta, short on Tesla. I still had the Apple short, and then I went long on Disney based on news, and then I got Okta as a post-earnings play. Like I've been saying, I had this weird balance going on there, getting squeezed on the NQ, so I wanted to balance things out. But now why I chose Meta, even though they're up, remember, we bought Meta in the long term. It's already up over 100%. This one is just for a trade. I just got squeezed out of a Meta short on it, but the way I'm looking at it is I want to treat Meta like Netflix. If you remember, after Netflix earnings, they reported once they kind of got the green light from the market, it didn't matter what else the market did. It kind of held up. So that's what I'm hoping to get out of Meta here. We are going to see, and at the very least, it's been moving like $5 to $10 a day intraday. So a lot of good trading opportunities quantities. I went long on 100 shares. I think I'm down like $4 a share on them. I got in at like 190-ish, and it's at like 186. So we'll see what happens from there. That is play number 1. Then play number 2, already in LMT. I may want to take a look at DFEN, but this was a weekend of China tensions. Again, the real story beyond the balloon is that we were about to meet up with China. We canceled the event because of the balloon, and now China and the U.S., they're kind of going back and forth. So let's see if this raises anything. You still got the war in Ukraine and all of that, but so far, defensives have kind of chilled out. Like defenses, like boom, boom defensives, they've chilled out this week. I guess so have value defensives too, but hopefully you see what I'm saying here. I'm going to keep my eye on it, but I'm not really like sold on it just yet. But depending on how things play out, we will find out what happens. But definitely keep some global tensions in mind. And then finally, play number 3. I don't have any active shares on it besides the long term, but Uber, they have earnings this week and they are at a breakout point. They're at like $33. The expectations are already somewhat positive, at least for their mobility segment. So I want to see how this plays out, or maybe it's kind of already made the move. And the idea here would be go for a pre-earnings run-up, or afterwards, if Uber does do good, there's going to be a lot of sympathies. Lyft, DoorDash, Grubhub, and then maybe even like travel stocks like Airbnb. So keep this in mind. Going to be watching that one, but those are the main plays. As far as everything else now, let's go into the trades that we made on Friday. So there's the Disney. I grabbed 100 shares at $11.54, and they had news on Friday that they were going to be selling titles to competitors. So thought I could make a flip on it, but they have earnings this week too. So I figured we'd ride it out there a little bit, and I want some upside, even though we wrote it up from under 100 to like 108. So I got it at a little higher price, and I really don't like Disney at this price. So we'll see what happens. Then I did 100 shares of Okta, $79.76. Some people ask me, they're like, why did you buy this one? And one, they have a deep value in the sense of, just take a look. You know, they were able to go up a decent amount here from the bottom, but you compare them on a multi-year chart, I mean, they're pretty cheap. They've been underperforming here. They are a growth name. Their earnings was decent, but the thing that drove their earnings was firing people and cost cutting. So I liked it. They got a bunch of upgrades, but I figured, hey, if I wanted some upside, I like something that kind of just hasn't moved too crazy and just getting active. And then even with their earnings, they may do something of this where they pop up, come down a little bit, and then break out. But definitely there's a decent amount of risk there if that goes against me. So watch out for that. That one is a second play I made. And then there's the Met. I got in at 192.35, so down on those. I closed the Google on Friday during the report. I shorted Tesla at 188.55, and Tesla will be interesting because they had I think January delivery numbers that came out over the weekend, so watch out for them. And then still holding the Apple, and we cut the Amazon and all of that. So pretty simple there as far as what I'm holding now. There's good old NQ down 32,000. We got the ES up there, so that's like what, $5,000-$6,000 difference. Remember before everything, when we were still negative on this one was down like 21,000. So pretty much gave up like $5,000 to $6,000 there on the gap. The thing that killed me though on Friday, and this actually brought my balance down. Remember my balance was holding up. Well, not as much anymore because the bonds came down. /ZN, where's the Meta? Again, there's down the 530, but I'm going to swap out the Meta because the yen, and this is something I'm going to have to keep in mind this week. You know, the yen, the YCL, with this new news of this guy who is going to replace Karuta, that brought things down. But then how the dollar moved on Friday with the jobs report, the bonds, that one really squashed me because everything else was already kind of working against me in that way. So going to ride those out. I may want to try to clear some things up here this week. Maybe I want to exit the yen for a little bit until we get some clarity, but going to be riding that out and see. There's that Apple short again, down $1,000. We got to make $2,000 on it the day before, but on a much bigger position. So that's a pretty big move for those 100 shares. So we're going to find out how that plays out. There's the Disney down $100, and then still in the Oxy. That one went against, but I'm still kind of optimistic in that one and going to be holding them. And then there's the Tesla short as well. And then I even dropped on the Okta. And again, like I've been saying, I have some upside plays in here, but they just haven't really been working. And that's the problem, is that now that things are up, if things kind of chill out, I'm kind of trapping myself in a way, and that's why I'm like, okay, maybe I need to clear some things out here, and we're going to ride with it and see how it plays out. But overall, I'm going to leave this up in the Powell on Tuesday. We'll see how that plays out from there. But before you know it, if nothing else happens here, I mean, it may be very clear cut as we get into the rest of the month and year until anything else plays out. And then we're going to ride from there. And shout out to the law terms. And I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you got to focus on what you got and let the things you don't have push you in the right directions. And maybe you'll find a blessing within there, baby. But it's going to be an exciting week. Your head needs to be in the game no matter what. And we got a long way to go, baby. Welcome to February. It's actually just started, but it's actually the first week. So I don't know. It's going to be exciting. Then we got Powell. What's going to happen? Okay, I love you. Bye. Or...